All right, let's dive right into this explainer. We're going to completely demystify the complex but honestly highly rewarding world of fisheries financing in India. Look, if you operate anywhere in the fisheries or aquaculture sector, you already know the reality. Having the right funding at the exact right time, that's literally the difference between just staying afloat and truly scaling your business. So let's look at the sheer scale of the sector. 2.8 crore, that's the number of fishers and fish farmers whose livelihoods depend directly and indirectly on this industry. I mean, this massive workforce is exactly why India ranks as the third largest fish producer globally, right behind China and Indonesia. But here's the catch. Despite this incredible scale and its absolutely vital contribution to our food security, this sector constantly struggles with getting access to formal credit. Here is our agenda for this explainer. First, the fisheries finance gap. 2. Quick capital with KCC and Mudra. 3. Big upgrades through PMSY. 4. Macro funds like NABARD and FIDF. 5. Choosing your ideal scheme. And 6. Your expert navigators. Section 1. The Fisheries Finance Gap. To really understand this gap, we have to look at the historic hurdle fishers face, which is this crippling reliance on informal moneylenders. For generations, people have been forced into exorbitant interest rates just to keep their boats in the water. But as this quote points out, the ultimate lifeline isn't just one magic loan. It's a targeted blend. We're talking subsidized credit, working capital tools, state-specific schemes, all combined with professional guidance. That specific combination is what totally transforms access to formal finance and breaks that cycle of expensive debt. Section 2. Quick capital with KCC and Mudra. Okay, if you need money right now for daily operations, this is where you look. The Kisan Credit Card, or KCC, is an absolute powerhouse for fishers. It gives you fast, revolving working capital, up to 2 lakh rupees for immediate needs like fuel, ice, or nets. The standard interest rate is 7%, but here is the absolute game changer. If you pay it back promptly, you're rewarded with an incredibly low 4% effective rate. Plus, it's completely collateral-free up to 1.6 lakh rupees. It's just phenomenal for day-to-day survival. Now, for micro enterprises, think local fish vendors or small processors, Mudra loans step in beautifully with these collateral-free tiers. Need a new mobile vending cart? That's a Shishu loan for up to 50,000 rupees. Want to set up a dedicated fish drying unit? The Kishore tier covers you up to 5 lakhs. And if you're really ambitious, maybe building out commercial cold storage, the Tarun tier does the heavy lifting, going all the way up to 10 lakh rupees. Section 3. Big upgrades with PMSY. So working capital is great, but what about when it's time to build a brand new pond or buy a deep-sea vessel? That's where India's flagship scheme, the PM Matsya Sampada Yojana, comes in. We are talking about a jaw-dropping total outlay of 20,050 crore rupees. It provides massive back-end subsidies directly to your loan account. For the general category, it covers 40% of the project cost. But look at that last row. It's enhanced to 60% for women, SC, ST, and differently abled applicants. You're basically getting more than half your capital back. Section 4. Macro funds with NABARD and FIDF. You might hear NABARD and think you need to march right down to their office for a loan. Well, actually, scratch that. That's not how it works. Individual fishers don't apply to NABARD directly. They're more like the engine running behind the scenes. They provide low-cost refinance to your local cooperative or regional banks, who then pass those lower interest rates down to you. They're also the ones funding massive state infrastructure, so your local markets and jetties are actually built to support your catch. And for the truly massive, landscape-changing projects, we have the FIDF, the Fisheries and Aquaculture Infrastructure Development Fund. Imagine an entire state deciding to build a sprawling new fishing harbor or a vast aquaculture park. That's FIDF territory. It's a dedicated 7,522 crore rupee fund offering concessional long-term finance, which drives effective interest rates down to a super competitive 5 to 7%. Section 5. Choosing your ideal scheme. With this absolute alphabet soup of schemes, how do you know what to pick? A really common point of confusion is PMSY versus FIDF. The main difference here is scale and structure. PMSY gives direct capital subsidies, essentially free money credited against your loan, to individuals for personal vessels or ponds. FIDF doesn't give a direct cash subsidy. It focuses on providing those low-interest term loans for massive infrastructure developers. And hey, don't forget to check your local waters. States love to layer extra benefits right on top of central funds. West Bengal has the Macha Bandhu for pond development. Andhra Pradesh offers direct income support during fishing bans. Odisha even gives you a top-up to match your PMSY benefits. Savvy business owners will literally combine these, using PMSY for construction, tapping a state scheme for nets, all while running daily fuel costs on a KCC. It's brilliant. So, before we chart our final course toward actually applying, consider this really frequent question. If you've never taken a formal loan before, where should a total beginner start to avoid drowning in red tape? The clear, resounding answer is the KCC. Minimal documentation, absolutely no collateral up to the threshold, and extremely quick processing. It is without a doubt the easiest and safest entry point into the formal financial system if you're trying to establish a good credit history. Section 6, your expert navigators. Now, knowing about these schemes is one thing, right? Actually securing the funds is a whole different ballgame. That's where advisory firms like the MSME consultants come in. Look at this streamlined process. First, they do scheme mapping to assess your exact eligibility. Then, they handle the absolute most critical part, preparing your detailed project report, or DPR. After that, they handle the end-to-end document compilation and filing. And finally, they liaise directly with the banks to advocate for you through the disbursement stages. Because here's the truth that experts at the MSME consultants will tell you. The biggest hurdle to getting a loan isn't a lack of funds. It's incorrectly filed paperwork. Having seasoned consultants by your side to manage your registration and document compilation completely minimizes those frustrating bank rejections, securing the credit you desperately need. So, as we wrap up this explainer, I want you to ask yourself, are you going to stay anchored to the exorbitant rates of local moneylenders, or are you ready to cast a wider net? The capital to scale your fisheries business is literally out there waiting. The real question is, who are you going to trust to help you reel it in?